Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope I am audible to you. You are able to hear me. Yeah, fine. Let me display the PowerPoint presentation. Asian session live market analysis. So I'll be doing the weekly analysis for the week of April 16th to 20th. And the webinar is on 16th April between 5 and 5:45 GMT. So I'm going to review what could be the possible moves based on the derived forecast. And also we will do the market reading and the trading strategy. So combining the derived forecast and the market reading, we take trading decisions and then use the trading strategy to limit the risk and maximize the profit. So this is going to be the essence of this particular webinar, which will be given twice a week. On Monday, I'll try to give the forecast for the entire week, and this time it is from 16th to 20th of April. Then on Thursday, I will try to review how far the forecast has guided us or the market reading has guided us and how far our trading strategy has helped us to minimize the risk and maximize the profit. So this is how we are going to do the review, and also every week I will try to give the weekly forecast. Besides, on a daily basis, the forecast will be displayed in my blog, iknowindices.com/blog. There you can just make a note of the forecast and use it as a guiding factor, but do more of a market reading to fine-tune your studies and take the trading decision. So the derived forecast is the algorithm-based statistically derived forecast. So it is statistically derived, so all theoretical analysis may or may not work in that of the markets. So theoretical is different from that of the practical, but still we can use the theoretical as the guidance for our practical decisions. And this daily forecast, I will try to display it in the blog, and also you can do the market reading following the techniques. So we note down the high and the low set between 2:30 and 3:30 GMT in 4 majors and 2 commodity pairs and use them as the reference levels. So for all, we try to use the live market code page to make a note of the levels between 2:30 and 3:30, or around 3:30, we make a note of the initial low and the high in each of the 4 majors, Euro, GBP, USD Yen and USD CHF, and 2 commodity pairs, USD CAD and Australian dollar, and use them as a reference levels for the day to identify the type of moves. What are the type of moves they do during the session start time? They make either the false move or the stop-ins, and as the session proceeds, you come across the swings, and finally either they breach the initial high or breach the initial low and try to make the extended move on the upside or the downside for 2 hours. In case if they continue the move beyond 2 hours, we identify that it is an intentional move, then wait for the second sessions to get over. And during the start of the third session, we try to do, the market has dropped, try to take a buy. If the market has risen, we try to take a sell. So that way, following the GMT time and the session times, we try to identify what sort of trades we can do. We are not in a hurry to enter into the market. We want the spread between the low and the high to be more than that of 40 to 50 pips in order to initiate the trade. Then after taking the decisions or reading the market, the type of moves, we still use the trading strategy because we want to be unbiased, and we always know that our readings can go wrong and the market can suddenly turn opposite to our understanding. So in order to prevent the risk, if we trade without a stop, then it will be unlimited risk. Instead, we try to take the entry stop or the hedging order. If the position is making loss, as soon as we take the position, it will be making loss, and try to keep 30 pips hedging order. In case the hedging facility is not available, we try to keep a stop of 30 pips to limit the risk. Once the position makes profit, we try to keep stop at entry and remove the hedging order. And once the position continues to make profit, we trail the stop and also use a trailing limit and maximize the profit. So we have the strategy to minimize the risk and maximize the profit. In the event, if the market is making extended move beyond 2 hours, if you identify, then we simply close the original buy position and hold the sell position and try to maximize the profit and book the profit during the early third session. So at the end of the day, we square up the positions. That is one type of trading strategy. The other type of trading strategy is simply keep the hedging order, and once the hedging order makes profit, we know that they are making a move opposite to our expectations. We simply keep stop at entry in the hedging order and let them reverse the market and come and close our hedging with stop at entry. Then we continue to trade with our original buy position, because we know very well the market, they cannot continuously drop or continuously rise unlimited way. They have to necessarily make the swings on the upside as well as the downside. So we try to read the market without any fear. We try to accept the trading strategy, either stopped out or hedge is filled. Then we calmly handle the hedge, watch for 30 minutes, and then try to keep stop at entry. We are not in a hurry to close the hedging immediately. So if you use all these trading strategies along with that of the market reading and use the derived forecast as a guidance factor, you will be able to take your own trading decisions, and there is nobody need to give you a call in order to take trading decisions. Now with regard to the initial lows and the highs, this is the table I'm using for noting down the initial lows and the highs. You can also prepare a table of this nature and keep all the 5 days of the week and also the initial low and the high against each currency. And then you can note down on a daily basis the initial low and the high. And those who would have followed it would have noticed last week they started around 1.3034 and then ended up going closer to that of 1.33, then came down. Then again they are starting it around the same level, 1.3009, and the high is 1.3076. From the start, they are not breached the initial low or the initial high, indicating that they are making only a lower level swings as a week beginning false move. They just formed the low and then later on they stopped breaching the low for more than 30 minutes, but still they are holding closer to that of the low. From that of Friday close, if you notice that they are just showing the negative net change. Let me give the link for the live market code page and also focus the camera over that of the live market code page. So you find that Euro is making about 54 pips negative net change. And in the case of GBP, it's also showing negative net change of 26 pips, and it is trading around 80.65, 80.67, and Euro is currently trading around 1.302224, and 1.3076 is the high, 1.3009 is the low. And in the case of GBP also, you come across negative net change of 21 pips, 1.5826, 1.5829 are the current levels. 1.5862 is the high, 1.5822 is the low, just 40 pips spread and 21 pips negative net change. When Euro, USDN and GBP show negative net change, we know very well they are making a contrarian move on the downside in order to drop Euro Yen about 78 pips, a cumulative effect of 74 and 26, and also 26 and 21. You find GBP has shown about 59 pips negative net change, GBP Yen. So after handling of the downside, because last week they just made the drop in the case of Yen crosses, and they are just making a brief drop on the downside in the case of Yen crosses, so that those who are holding long position from last week might think that it might be a great pressure on the margin. So try to close the position and try to turn opposite. But the players buy all those sells at the lower level and then continue to make the rise. And also you come across Euro is making 54 pips negative net change, whereas GBP is showing 21 pips negative net change. As a result, Euro GBP has come to 0.8227, 8230. 8247 is the high, 8221 is the low, 24 pips negative net change is seen. You find that in all the crosses, predominant of the crosses, the negative net change is seen. So that is how they just pretend as if the market is going to fall. So as far as the majors are concerned, we can understand that it could be US economic conditions or the European economic conditions which is driving the market on the downside. What about the crosses? What economic condition is driving them to come down? So this is how they just make the drop, and then in all the currencies they make a drop, crosses, and then finally they gain the levels during the day. You will be able to see that on a weekly basis they make week beginning false move. It might be for the whole day or for 2 sessions or 1 session. But according to the algorithm, they are expected to make for 1 session the week beginning false move today. And later on they are expected to make the USD weakening move. And now you find in the case of USD CHF, it is come to 92 area, 0.9229, 0.9232 are the current levels. 9242 is the high and 9198 is the low. 36 pips negative positive net change is seen. When Euro has made about 53 pips negative net change, CHF has gained only about 36 pips. So because of that, Euro CHF is also on the downside, making a nominal dip around the Dow 1.2020. Then in the case of Canadian dollar, it is just 1 pip short of the parity at the moment. 0.9999, 1.0002 are the current levels. 1.0004 is the high. 0.9984 is the low. 4 pips positive net change is seen. When Australian dollar is making about 57 pips negative net change, USD CAD has made only a 4 pips gain. So they are all just pushing it down in order to make the downward stop and induce the traders to liquidate the long position and take fresh sell positions at lower level, thinking technically Euro and GBP and all our currencies can go down drastically, or somebody is not supporting and things like that. And later on, you'll find that the person who was not appeared to be supporting would have bought all and just drive the market on the upside with a different story. So this is how you come across the market is being manipulated on a weekly basis. And you know that week beginning false move on a Monday, and then Tuesday just opposite to that of the Monday move. Today week beginning false move on the downside. The Tuesday they make an upward move. Then Wednesday they make either way stop-ins. In the middle of the week they make either way stop-ins. If they finish upward stop-in, then come to the downward level and make a downward stop-in, and then make an upward stop-in. That sort of moves they do. On Thursday and Friday they just make the intentional move opposite to that of the Monday move. Namely, Monday if they have dropped it, Thursday and Friday they gain levels. And in that process, sometimes you may come across the profit booking. They wanted to lighten their positions. And as you know that US is prepared for the elections in this year. So you might come across a lot of people liquidating their positions, and those who are supporting the government and opposite to the government also liquidate the positions in order to find out what could be the outcome. Then later on they try to enter into the market. So suddenly you may come across the profit booking moves like Friday. Wow, they have done it. And you have to be prepared because the market is being manipulated and they have to necessarily make the rise to drop. Simply holding it and drop, simply holding it drop, it will drive away all the traders. And nobody will do a sell and buy trade just like that when the market is flat. only on a pullback they may try to sell technically. So in order to attract the traders, they have to necessarily make the volatile moves, and also they have to pretend in the market from time to time, and later on try to show their intentional moves. So we have to be cautious. Hence, I said that use the hedging orders to limit the risk. And in the case of GBP, it is 1.5822, 1.5862. They are not breached the lower the high. And in the case of Euro also, they are not breached the lower the high after forming around 3:30 GMT. And USD and 80, 85, 81, they breached the low 80, 85 and come down to 80, 60 on the downside, and currently trading around 80.61 in USD because Japanese session. The Japanese traders are active, so they are trying to make a downward move in the case of yen and yen crosses, holding Euro and GBP in the range, not breaching the lower the high. And in the case of CHF, they are not breached the lower the high, and Canadian dollar also, they are not breached. They breached the high by 2 pips. 1.0004 has become the high. And Australian dollar, the low there breached by 2 pips, 1.0312. So Canadian dollar, they breached the high. Australian dollar, they breached the low. That shows that they are doing the USD gaining move. And 1.0381 is the high that is undisturbed. So even though you don't come across the breaching of the low or the high in the case of Euro and GBP, and they are holding it near that of the low, USD they breached the low, indicating USD weakening move. And in the case of Canadian dollar and Australian dollar, in Canadian dollar, they breached the high, and Australian dollar, they breached the low, indicating the USD gaining move. So it is a contrarian move. They are trying to do it with regard to the yen crosses, with that of the commodity pairs, and also with regard to Euro and GBP, as well as with regard to the commodity pairs like Canadian dollar yen, Australian dollar yen. They are trying to handle it on the downside. Then afterwards, they are expected to come to that of the majors during that of the late session onwards. So let us see the expected market moves for today. Now, Japanese session is from 0030 to 7 GMT. Currently, it is 5:17 GMT. That means from 5:30 to 7 GMT will be the late session. The last 1.5 hours will be the late session. Similarly, the first 1.5 hours will be the early session of each session. So a session is divided into early session, mid session, and the late session. The late session is 1.5 hours towards close of the session. And in between the session, you come across the gap time. Then 7:30, the European session starts. Then 1.5 hours will be the early session. The last 1.5 hours from 11:30 to 13 GMT will be the late session. Similarly, US session is from 13:30 GMT up to 15 GMT will be the early session. And the last 1.5 hours from 19 to 20:30 GMT will be the late session. So here you come across the entire session, what they intend to do. Swing and firm up moves may be seen, and suddenly you could come across a quick rise and coming to that of the Friday close level or slightly above, and give that bullish feel and start making the slide again during the late European session. Then people might think that no, there is no strength in Euro and GBP. They may probably go in for the sell, expecting further drop during the US session. But US session, they are expected to make a quick rise. So this is how either you do a buy and sell trade or a sell and buy trade. There is no guarantee that they will make the move as per that of the market sentiments, and they can pretend as if the market is moving as per that of the market sentiment and suddenly reverse. That is the game plan. And always they try to give the unexpected. So as objective traders, we always anticipate the unexpected and try to use the hedging order to limit the risk. There is no other goal. Then rest of the days in this particular week, And today it is 16th of April. So these are all the moves. And tomorrow, 17th, they are expected to make again the USD gaining move during the start of the day and then slowly start gaining the levels. And you know that they are making the market in a range bound way in order to accumulate huge buy positions. And after accumulating huge buy positions and making it appear as if US dollar is going to gain more, and the players, the main currency is US dollar, so they use that currency to buy. So they buy at a lower level and then gain the levels about 200 to 300 pips, book profit, and allow the market to drop quickly and buy again and gain the levels quickly and book profit. Then this sort of circular trades, when they do, what happens? Their buy average, the last buy average, comes down drastically with the added profit. So in the event, if it is election related or any other data or any other rumor which could trigger, or the events which could trigger the market to move downward, they will not make any loss. And that is why they are just doing this sort of move, and don't think that they are simply making consolidation. The consolidation is with a purpose to make a prolonged upward move. We will be able to realize it, and this is how they have been doing it in 2002, 2003, and people were really willing to sell, and subsequently later on towards the close of the election they made a very big rise and then start making the drops. So they cannot keep quiet. They have to see the profit, and that money has to be used effectively in so many places, and they need huge money power in order to make things work in this world. So market is the one place to generate money. So they cannot just like that make lackluster moves in the market forever. So tomorrow, Tuesday, they are expected to make the USD gaining move to start with, and later on show the USD weakening move during the day. On Wednesday, they are expected to make either way moves. Initially, they are expected to make the USD weakening move during the Japanese session, and followed by that of the slow slide all through the day, and then recover nominally on during the US session. On Thursday, the market might show lackluster moves, and you may find that slow moves are happening on that day and without showing any clear direction. On Friday, the market is expected to be volatile, and finally, they could gain the levels during that of the US session and go to that of the higher range of whatever the range what we have seen so far, 1.31, 1.30 to 1.33, and this like that. You come across the range in Euro, GBP, etc. They are expected to close the market around those range. And this week, they may not make any aggressive gains in Euro and GBP, and either way trading opportunities could prevail. From next week, that will be the last week of the month, and they are expected to make the aggressive moves in the market on the upside. So let me minimize the PowerPoint presentation and try to answer to the questions which are asked here. Okay, Jag has got a question. What are your views about USD INR for this week? USD INR is expected to slowly come down. So here you find that currently it is trading around 51.65, 35 pips positive net change is seen in USD INR, and slowly during the day you might come across that it is closing around that of 51.10, and tomorrow you could come across it is coming to 50 range, and next week we'll be able to see visible drop in the case of USD INR. This week it is going to be sideways move in most of the currencies. In Srinivas. Regarding Euro USD, If it breaks below 1.300, will it go below more to 1.29 levels before gaining? See, there are two conditions. One, they can just go below that of 1.30 in order to hit the stops. Below that of 1.3009 in case if they come across plenty of stops. And in case if they come across, there are also a lot of short sells in the market and they may not breach the low. And they may just breach the low by 1 or 2 pips to pretend as if it is going to drop and then suddenly reverse also. And if you notice where exactly they are holding it, they are just gaining, they are holding closer to low, but gain about 10 pips from there and dip about 10 pips. Gain about 10 pips, dip about 10 pips. So there, it appears more of a pretension for me. I may be wrong, but we have to see during the course of the day how exactly they are going to take it. And in case if they breach 1.300, they can come to below 1.30 briefly, or even if there are a lot of traders buying there, they may just make one more downward move and hit the stops and come up. In case if they drop very quickly, the rise will also be very quick. And in case if they hold it here, then it could be range bound for another week. So during the course of the week, during the course of the day, we'll be able to identify what they intend to do. And now USD yen, they are just making a drop. Again, they cut and formed 80.46. So it is more of handling the yen crosses. Wherever they are able to make money, they are trying to handle that. In SH. Last Friday, we were expecting Euro GBP to gain, but it did not. So taking Friday price movement as an example, and what point we define big players have decided to drop the price. See, they don't just like that drop the market. They gain before that. After gaining the levels, say around 1.32, and then stop cutting the new high and try to make an extended move. Then the next day they start making the intentional move on the downside. So if it is an extended move, stop cutting the high for more than 2 hours. After 2 hours, and simply hold the high. We understand that they are simply holding it to build sell positions. The next day they are expected to make the downward move as the intentional move. And that is what happened on Friday, Thursday and Friday. So the forecast has gone wrong, but the market reading has come true. So that is why I want you to use both. Is it when price break initial low during European session and stay there for a few hours? See, we have to identify the type of moves rather than giving more importance to that of the levels. If you try to give importance to that of the levels, you may not be able to identify the type of moves because you become psychologically influenced by the market. Suppose euro goes below 1.3000, hardly about 27 pips or 30 pips. They can easily make it if they want. And if they do it, then immediately you become bearish. Then you are not able to identify the type of moves what they are trying to do it. During the late session, are they doing it? Or during gap time, whether they are making such moves? Or during session start time, are they doing a stop? And those things are very essential. So what is the best thing? You just note down the low in the live market code page and see during the late session, late Japanese session, gap time and start of the European session when they are trying to breach the low. And if they breach the low and see that in less than 30 minutes, they come above that of the initial low. And if they take more than 30 minutes to stay below that of the initial low, then wait for 2 hours to see they stop cutting the new low and recovering to that of the initial low. In that case, they wanted to make, after extended downward move, they wanted to make an intentional upward move. And also the net changes indicate whether there is a potency to reverse. If they make a drop of more than 75 pips, they don't reverse it on the same day. excepting during trend reversal times. So if they have done it, then just leave the day, and the next day they review the market and try to take a trade. It is not necessary that all the time we have to enter into the market. And otherwise, why not I do sell and buy trade? You can do sell and buy trade provided you use all your strategies of limiting the risk. If you try to take a sell without a stop, like try to take a buy without a stop, you try to do it. If they gain drastically, then you might be in trouble. So on either side, the trading has got a risk. It is not that only on the downside it has got a risk and the upside it is not having the risk. They can, if all traders turn short sellers, and I am 100% sure that they will gain the levels irrespective of the economic conditions in Europe. So you have to differentiate the moves based on the time taken. So less than 30 minutes stop and 2 hours extended move, and beyond 2 hours it is intentional move. Then Moses. Today is Monday, we will expect false move. That is what they had done it on the downside, and now we have to see whether they are recovering or not. Moses. Which country is having elections? They are expected to have the elections in US. Yes. So whenever the elections are in process and the players become very, very cautious, know whom to support and where to get the support and things like that. Because they know very well they are doing something against law. So unless and otherwise they are safe, they will not do that. Then Shan. Will the hours webinar be recorded as well? No, Thursday webinar will not be recorded. Only today's webinar will be recorded. So for you to review it on a daily basis, otherwise you can just look into that of the blog where the expected market moves are given. The rest of the thing you can do it. Whether by market reading and trading strategy, you can do it. And so I'm trying to give a gap between the webinars so that you start making your own analysis. And Malik, what about Euro? Euro is expected to make slow gains when compared to that of GBP. They could gain the levels first. It is making lesser negative net change when compared to that of Euro during the day. That is for today in SG. The last week of month when aggressive gains, what levels in GBP Euro after the May? After that May is USD gaining. Okay. See, all along we have seen from January to March, there were more of a sideways and small gains in the case of Euro and GBP. Even though I was expecting a big gain, they are not making the market very volatile. They just nominally gain the levels and come back to the same level and gaining that sort of moves. They are doing it. More of a consolidation and sideways moves. When they are making of this nature for if you refer to that of the year beginning charts of 2004, 2005 and things like that, if they prolong the lower level consolidation for 4 months, then the moves become very big on the upside. They just do it for 2 months, then the moves will be, upward moves will be nominal because they have to accumulate the buy positions in huge quantity and see that even if the market collapse due to some unavoidable natural calamities, they will not make loss. Their money will not erode. Then they start gaining the levels quickly. Why they have to gain the levels quickly? Because at the lower level they buy, say at the lower level if they buy about 10,000 lots, for example, then if they buy another 10,000 lots at middle level every 10 pips, then the average will also go up along with that other market. Whereas they buy 10,000 lots at the lower level and accumulate 500 lots, 500 lots, 500 lots like that quickly. So what happens? They would have taken about 15,000 lots totally, but the market would have gained about 100 pips. So they have to necessarily gain the levels in a very quick way so that they buy at a higher level a lesser quantum. This is a strategy they use in order to gain the levels. That is why I always say quick moves are false moves in the market. If they quickly gain the levels, it is to sell, but we become bullish. If they quickly drop, it is a buying strategy for the players. They quickly drop and hold it at a lower level, so the traders holding long lose the patience and liquidate. So it's the easiest way of testing the patience of the traders and earning from them. So the players are smart enough. So in the month of April, they are supposed to drop the market, but it could be more of a sideways. If those who would have listened to my yearly forecast would have noticed that in the month of April, they are till first week of April, they are expected to gain, then afterwards drop it. Since the gain was not much, the drop is also not expected to be much. Then again in the month of May, June, July, they are expected to gain the levels. Then DT. What is your review on Singapore dollars this week? Singapore dollar, if you just notice it, it is currently trading around 1.25 area and slightly weakened by 42 pips. On Friday, they just dropped and made Singapore dollar stronger, even though other currencies become weaker, and now they are just weakening it. And in this cycle, they are expected to go up to that 1.2750 and then make a range bound swings again in Singapore dollar. Then Jason, they expect Euro GBP moving downward from here. Now I'm not anticipating any big downward move, but small dips or just stop and moves are part of the market. Then Ahmed, what is your view on New Zealand dollar? New Zealand dollar, if you just notice it, it is currently trading with a negative net change of 22 pips when Australian dollar has dropped about 45 pips. As a result, Aussie New Zealand dollar cross is on the negative net change because numerator has got more loss when compared to that of the denominator. So it is currently trading around 25.82. So New Zealand dollar is expected to slowly take over Australian dollar from tomorrow. Then Shans, how far on the high side do you expect Canadian dollar CHF to go this week? See, whenever you come across the USD gaining move, immediately you find USD CHF and USD CAD are participating and gaining the levels. And here you will find that they are expected to gain the levels today and also midweek. And finally, Friday, you're expecting their denominator currencies are expected to gain the levels. More sideways moves are expected in the case of Euro and GBP. The denominator currencies are expected to make the gains during this particular week. And you'll find whatever the high they reached last week, we could be able to see in Euro GBP and Australian dollar, and slightly higher also during this particular week. In Malik, where we buy Euro. See, whenever the moves become quick, you try to buy. So when they make a quick drop or come closer to low and see that they are doing a false move up to the low or making a downward stop and during the late sessions from 5:30 onwards, 5:30 to 7 GMT, you can watch and try to take a buy. Otherwise, during the gap time, they make a dip, you can buy. Or during the early European session, when they make a swing on the downside before making a rise, you can buy. So these are all the times. So when you know that nearly about 2 hours, they are going to make a lower level swing, better wait for the European session start and try to take the buy position. Then Ram. I remember you saying Euro will not reach 1.30 region, but it has reached. Yes, I accept that it has reached. And that level is your forecast, a real forecast or a wishful thinking? No, I just spoke about the expected market moves. And I have said 100 times it can go wrong. Any forecast has got its own limitations. NDT. What is your view on Australian dollar? Do you expect to see Australian dollar below 1.02? Now, I'm not expecting a big drop in the case of Australian dollar because the initial drop they had done and they have stopped cutting the low in the case of euro and GBP, and nominal dip in the case of Australian dollar by 2 pips and then started recovering above that of the initial low. So it is unlikely they can go down in amaze. Is trend of euro still upward? Yes, sir. And we will be able to see in the course of the next month how they have just fooled us, creating all bearish feel and accumulated the buy positions in Moses. So today we are expecting extended move or intentional move. You should be able to study Moses, whether they are just, now it is between the low and the high, nothing is seen. So in the case of the commodity pairs, they made an upward stop above that of the high and then made the dip. In the case of Australian dollar, they made a downward stop and gained above that of the initial low. So a stop and is over. Now we have to see whether they are making a swing up to that of the high or again doing a lower level swing and another stop and during the start of the European session before making a rise. So that is how we have to read. So I will not be able to say beforehand whether it is an extended move or an intentional move, and that is for us to look into the market and identify in Moses. Indeed. Do you expect to see more drop than rise in GBP? So I am expecting more rise in GBP. As you see on a daily basis, they make less drop in the case of GBP and compared to Euro. Their intention is very clear. They wanted to quickly gain the levels in the case of GBP when a good opportunity comes. So 1.56 is very unlikely at the moment. Then Emerald, is there any specific time you have deducted is better for placing trades in the Asian session? Start of the Asian session around 1 GMT is a good time to enter for a small swing trade, and wait till 8 GMT of the European session, then try to take the position in the case of Euro and GBP when they are closer to low. Then you will be able to see profit in such trades. So as I explained many times, wait for 30 minutes from the session start, then you will be able to identify what move they are trying to do it. Then it is easy for you to capture the profit rather than trying to take a position any given time and later on hold it for a long time. And Rajesh, is a move of yen pairs is an extended move. See, as far as the US yen pairs are concerned, they have made the one-sided downward move. No, USD yen and yen crosses, we know that they make the one-sided upward move as well as the one-sided downward move. One-sided upward move, they took it up to 84 without giving any profit booking opportunity for the any level short sellers. Now they had done it on the downside. So they come almost to 350 pips on the downside. And very soon I am expecting them to go to 84, 85, and that gain might be very, very quick, unassuming and quick. Okay, once I stop cutting the new low for more than 2 hours, we can buy. Yes, you are right. In jail. If you want to buy in the case of yen crosses, then you have to see euro yen if you want to buy. Then see that euro, they are not breaching the low for more than 30 minutes. And USD yen, they are not breaching the low for more than 30 minutes. Then euro yen, they are not breaching the low for more than 30 minutes. Of your observation during mid session, you can try to take a buy. Then definitely you will be able to see the profit. So that is why I depend on more on the trading strategies. A market reading and the trading strategy. Forecast, we need it in order to have a bias over that of the market. NJ, how do you define quick moves? Quick moves, you know that momentum will be very, very fast. So suppose euro is trading around 1.3018, quickly it will jump to 1.3036 and 45 and 5578, then 1.31. In about 10-15 minutes, you will find that they have gained all the levels. That is quick movement. Momentum will be very fast. Then MN. What about CHF and Yen? Yeah, CHF, they are expected to, they have gained the levels nominally with a positive net change, but it is lesser than that of the euro negative net change, and they are expected to gain the levels first to 93 area, then start making the swings around 93 to 92 area. They may not visit 91 and 90 again. Yen again, they have just done the downward extended move, but on a Monday, their downward move was very limited, indicating that the upward potency is very great. They could be able to reach 84 by this week or early next week. In SH. Can we use the same initial high and the low strategy, which we take around 330 with the crosses pairs? You can take it. Or those, yeah, you can take the initial lows and the highs. Expected levels for CHF. Yeah, CHF is expected to gain to 93 area to start with, and later on it is expected to make the swings 92 to 93, then slowly breach and go to 94 area. So I'll focus the camera over that of the PowerPoint presentation. So in the case of euro, GBP, they are not breached the low or the high, and they are just breached the low. In the case of yen, formed 84.46. So indicating that below 80.50, they had done the downward stop and now come to 80.58, 80.59, and they are expected to hold around that and slowly gain the levels above 80.85. Then once it goes above 80.85, they will breach 81 and start going above very quickly. Then USD CHF 91.98 and 92.42, they are not breached. Canadian dollar, they breached the high by 2 pips. And low is undisturbed. And Australian dollar, they just breached the low by 2 pips and they have gained the levels. And you know the commodity pairs lead the rally and lag behind. On the downside, Australian dollar has lead the rally, made about 53 pips negative net change, and the euro 60 pips negative net change. And now they are expected to gain the levels in Australian dollar and slowly gain the levels in the case of euro and GBP step by step during the day. The expected market moves for today: swing and firm up move during Japanese session, quick rise and the slide during late European session, and the swing and quick rise are expected during US session. And in this week, you could come across slow gaining moves, and probably they may try to reach to that of the last week high. And on a daily basis, I will give the updates of the expected market moves in my blog, iknowindices.com/blog. And you can use the market reading and also the trading strategy by yourself. And the derived forecast, I'll post it in the blog so that you should be able to do on your own the tradings and also the market reading effectively without anybody's help. So we'll meet again on Thursday and try to review where exactly the market has gone, either on the upside or on the downside. There are only two possibilities. And then try to review what they are expected to do and what they have done, why they have done like that, what could be the next step. Those things we'll try to read and continue our market reading during the course of the time. Thank you one and all. See you on Thursday.